Hello there, this is James, and you're watching Tixee Live. And a very good afternoon to all of you, and all of you a very happy Wednesday. In today's little program, I want to discuss, obviously, the latest developments from the OPEC Plus meeting happening right now in Vienna, plus a couple of little things or question marks in relation to the latest reveal of Musk reviving his Twitter purchase. Plus, discuss how the market is getting grisly once again. But before we get into all of that, don't forget, these little videos are for educational purposes only, and in no way whatsoever should be taken as financial advice. I always suggest you do your own research and do your own diligence, and of course, know the risks at hand before entering any trade. With that out of the way, let's get started. So, yes, we have the OPEC Plus meeting happening today. This is actually the first, person-to-person meeting. They had meetings, obviously, over the last couple of years, but obviously via Zoom or Skype or things like that. But this is the very first in-person meeting they've had since the COVID-19 outbreak. So, so it's quite a big deal. But the reason why they're meeting is because they're greatly concerned by the recent drop in oil prices, because as you know, we've had demand issues over the last couple of trading weeks where there are signs of growth is slowing down, so demand for oil is beginning to wane. So we've seen oil prices come down quite considerably from the highs they had in the middle of the year. So they're very concerned about this. In fact, they actually want the price to be stable around $100 a barrel, which is good for them, but it's not good for us, the consumer, obviously. But anyway, there's no confirmation as of yet. But the monitoring committee have said that on the table, and most likely their decision will be to cut 2 million barrels per day in output. 2 million barrels per day. Now, that is a very high number, but if we look at the current supply from OPEC Plus at the moment, there's a good majority of members are missing their quotas already on the current production. So realistically, that number actually would be, for the market in general, 860,000 barrels per day. So still a big difference, but not as scary as 2 million, but it's still a big difference. Now, obviously, the market is waiting for confirmation from OPEC Plus that this is going to be their decision. But the question I have to ask about this, because this is a political nightmare for the US, because apparently, the US and the Kingdom of Saudi Arabia are supposed to have this very special relationship. Now, just in the summer, President Joe Biden went over to Saudi to ask them to increase production, because obviously oil prices or gasoline prices were skyrocketing. And obviously for the Democrats who are in power at the moment, that's not a good thing. Not a good thing for obviously the people who elect you. You get blamed a lot for it. So he went over to ask them to increase production so he can start bringing down the prices. They agreed at the time to only increase production by 100,000 barrels per day. So this is a really big sort of like salt in the wound, or really big insult, if they'd actually indeed 860 barrels less. And when they were asked to increase it to stabilize prices to help out their best buds, the US, they could only do 100,000 barrel extra. So that is really going to be it's going to be a political nightmare. And obviously oil prices are on the move slightly higher. Again, it's more of a case of buy the rumor, sell the fact. We'll have a look at it in a minute. But like I say, if they do this cut, if they do carry on with the 2 million barrels per day cut, which is realistically supply terms for the market, 860,000 barrels, then that will still be the biggest cut they have done since 2020. So anyway, let's have a quick look at what oil is. At the moment, as you can see, it's still pretty stable, as we are sort of waiting confirmation of this actual agreement by OPEC. I really do think we might see a little bit of case of buy the rumor, sell the fact when they do confirm it. But at the moment, like I say, it's holding quite steady. If we look at it on a smaller time frame, on the 30, you can see it is spiking down a little teeny weeny bit. Currently trading at $86.17. Brent is the same. Currently trading at $91.63. I really, like I say, when we do get confirmation of the cut, I think we might might potentially see a bit of buy the rumor, sell the fact before we might see oil prices move higher again. So anyway, we'll have to wait and see what the confirmation is. In other news, yes, of course, as people, those who were kind enough to join me this morning, I talked about Musk's U-turn. Like I said, this week has been a week of U-turn. The UK government do a U-turn on their tax cuts, and now obviously Musk has done a U-turn on his purchase of Twitter, and he's revived his 44 billion, shall I say, bid for the social media platform. Now, basically, his plan is what he said to confirm this deal is going ahead. He says he wants to involve Twitter into his new X app, which is an all-in-purpose app, apparently. So he wants to use Twitter and develop it into his new X app, whatever that may be. Now, there was a question left by a young lady who watched my morning program this morning, and she asked the question: Do I think the drama is all over with? If it's finished with Musk and Twitter, is the deal done? She left a comment on YouTube, and that's a big question which a lot of the market is asking because though it's looking far more likely that this deal will proceed than it did several months ago, there is still some sticking points. One, people on Twitter, some people in Twitter think this is a delay tactic by Musk for the court case. They think he's delaying it because obviously if he had to go to court, and this is quite funny, the timing of him saying, do you know what, I'm going to buy it now instead of going to court, is because in the court he would have to reveal some deleted SMSs he did or texts he's done to other high-ranking tech officials as well, and he didn't really want to get his dirty laundry or his business out in the open to the court because he would have to have done that. Plus, I think at the same time, his lawyers were saying the chances of you winning this case is looking more and more unlikely. So some people on Twitter think this is a delay tactic. The other question mark on this is funding issues. Now, he's using Wall Street banks to provide up to 13 billion for the deal. Okay, 13 billion. That's not unheard of. Okay, that's often how it's done. However, these original deals he did with the banks for 13 billion was done back in April. And as you know, and I know, the market conditions are very, very different to how the market was in April. I mean, look at the right increase in interest rates. So that is the big question. Okay, how much this deal is going to hurt the banks who agreed the original deal back in April? Because the conditions, what was agreed with Musk back in April, are now very, very different. So that could also be a sticking point. But I think in general, the market does sort of assume the deal is over the line. But I'm saying there is a couple of those little things, which means we haven't quite heard the end of this story as of yet. But anyway, let's have a quick look at Twitter, see how Twitter's reacted so far today. As we know, it skyrocketed yesterday by 22%. It's still trading higher at $50.82, close to, by the way, the price Musk has agreed to buy it for. He's agreed to buy it for $52.40 per share. So close to that level. So it's still on a high, still benefiting from the gains it made yesterday. Not as dramatic as it did yesterday, but currently trading now at $50.81. In other news, and what I really wanted to get to was the whole point of this video today. Now, as I said this morning, the S&P had its two best trading days since, say, April 2020 over the last 2 days. And obviously, as I was speaking yesterday and today, there was a lot of optimism. The markets were in the green. However, like I said, I had to question it. The reason why it was in the green is because the market started to think we're going to get a pivot. They're having pivot dreams, Fed pivot dreams. But that's looking more and more unlikely. Like I said yesterday, and I said before, you do not fight the Fed. The Fed is not going to necessarily back down from their commitment to bring down inflation to 2%. So I think whoever we think we're going to do a pivot or have a pivot soon by the Fed, then we are kidding ourselves. And as well as that, like I say, this is all, this hope was driven by two things. Okay, one was the RBA did a dovish type pivot, only raised interest rates by 25, not 50. So that gave the market the impression that maybe if this central bank can do it, maybe the Fed will start being gentle. And the other thing, we had negative US data. ISM manufacturing PMI came out at the lowest reading in 2 years. So that gave the market the impression the Fed might give us a pivot. However, today we've had a little bit of data, which is not so gloomy. US ADP employment change announced at 208,000 versus 200,000 expected. Not record breaking, but still pretty, good, impressive numbers. The other thing we had come out, which literally was about 15 minutes ago, US services PMI was announced at 56.9 versus 56 expected. So better than expected. Better than expected. Okay, is actually the same as the previous number, which was 56.9. So we're not seeing a decline in that sector yet. So basically what does this mean for the market? Again, basically the bears have come back in again. It's got a bit grisly again. And the US dollar is making up ground again. And we have a slight risk off attitude. Not so dramatic as we've seen it over the previous couple of weeks, but still risk off attitude as the bears get back into market and remind us that they're still there. So let's have a quick look on the market and see how things are shaping up. So let's start off with, say, the euro. Okay, obviously the euro was trying to challenge. There we go. It's trying to challenge to try and get to parity again. Actually was trading around about 99.84 was one of the highs it managed to get to at some point. However, like I say, reality set in. Like I keep saying, I don't believe the Fed's going to pivot. And as we can see now, it's back under pressure. It's actually gone through that key level now at 98.70, which I was watching. Currently trading at 98.37. Next key area for me to really realistically watch will be, here we go, would be about 97.48 would potentially be another key area of interest. So again, strong dollar again. And as we can look, even a longer bit, we've still got very much on that downtrend as well with the euro dollar as well. So yeah, again, reality bites. The sterling, same story with the sterling as well. I mean, this has been on a range today. This pair has been on one really impressive range. I mean, it managed to challenge the highs of 1.11464. It's challenging. Remember, that was the key level we put in a little while ago on that trend line. Didn't break it. And now it's testing a key area. Okay, a potential support of 1.1263. But what a range. 1.14 and now back to 1.1248. What a range. Again, the sterling hasn't been helped either by Liz Truss and her first speeches as Prime Minister, where she underlined her commitment for tax breaks and reviving the economy. So again, has not given confidence to the market. If we have a look at the S&P 500, we've had two very good days, like I already said, two best trading days for the S&P since April 2020. Not such a good day today, again, because of the reality that there's going to be no pivot. 3,729 points as well. NASDAQ is the same, again under pressure. 11,338 points. But if we go back to the S&P 500, let's look at it on the daily. Like I said, we had two really impressive trading days. But again, for now, the reality set in. Gold. Now, this is going to be a really interesting battle, a really interesting battle. It was bullish, again, benefiting from the weaker US dollar. Tested this key level I've been watching for a while, 1,726. Currently now under pressure like most other things against the dollar. Currently trading at $1,703.76. The first psychological level. This is where the bulls have got to step in. The bulls have got to protect this level, or otherwise, again, the bears are going to basically be in control again, in my opinion. The first psychological level for gold, this is where the bulls have got to protect it. It's going to be $1,700 psychological. Break through that, then realistically, the next key level I'll be watching will be $1,667.86 again. Bitcoin is the same again, under 20,000, still in a real tight range though. Currently trading at 19,761. Again, suffering from risk off appetite. So yeah, like I say, it didn't last long, did it? I mean, a lot of times I tend to do a lot of videos where we have a couple of days of hope. We ask the question how long it's going to last, and it doesn't tend to last very long. But anyway, other events to come this week. At the moment, we have EU retail sales. tomorrow. German retail sales, obviously, tomorrow. And then, of course, US unemployment rate and US NFP. And because the NFP, I think this is going to be key this week, is US NFP. I will be doing a watch along of the NFP at 12:20 p.m. UTC, so please come and join me for that. European equities as they currently stand. FTSE in the red, negative 0.82%. DAX also in the red, negative 1.42%. And Euro Stock 50 currently trading in the red, again, negative 1.27%. Don't forget, you can ask me questions anytime you wish, or simply say hello if you like. I mean, what do you think? I mean, I keep asking this question. Why does the market keep thinking they're going to do a pivot? The Fed's going to do a pivot. They keep saying this to themselves. They keep thinking this, but I keep saying they're not. Unless, like I say, we have a real, financial crisis, real financial disaster, some real damaging job numbers. Then, just maybe then, the Fed might start going gentle. But even then, I think, it has to be something really drastic, because they said they are committed to 2%. Whenever they speak, whenever they do speeches, Powell, whenever they speak, they always say they're committed to the goal. They've never once dropped a hint that they're going to go a little bit more dovish. So I don't know why the market keeps doing that. But anyway, we'll have to see. Like I said, the NFP, in my opinion, that's going to be the big event this week. This is why I'm doing the watch along for it. I think the market is waiting for that with bated breath. If there is no questions, don't forget, if you think of a question later, you can put it in the comment section, either on YouTube or Facebook, like this young lady did this morning in reference to Twitter. I will see it, and I will reply to it next time I go live on air. So bear that option available for you too. So keep that in mind. Anywho, if there is no further questions, or no questions at all, not to worry. Like I say, till next time then, in that case, if you're watching me on Facebook, by all means, give us a follow. If you're watching me on YouTube and you've liked this little video, subscribe if you like. Hit the notification button so you know next time when I'm going live. If you enjoyed this video, found it useful and interesting, and you put up with me, my over-the-top enthusiasm for the markets, which I simply cannot help, then give me one of these. It's nice to know that you like what I do. Anyway, till next time, which will be tomorrow, of course, at 8 a.m. UTC, and again tomorrow at 2 p.m. UTC for the US session. Plus, I'm doing a hashtag Ask James episode tomorrow at 12:30 p.m. UTC. Tomorrow's topic will be chart patterns and pivot point calculations. So please come and join me for that. Anyway, till next time, don't forget, these little videos are for educational purposes only, and in no way whatsoever should be taken as financial advice. I always suggest you do your own research and do your own due diligence. And of course, know the risks at hand before entering any trade. Till next time, every single one of you, trade safe.